Welcome everyone. Today again here with me we have Andrew Fox, the Structured Products Insights, and today we have a very interesting topic and someone with a lot of experience, Rico Blaser, which is CEO and co-founder of Vestr, who is, I would say, the biggest AMC fintech provider, and again with a lot of experience from working at Morgan Stanley, Zucker Kendall Bank, and again AMCs are quite a very interesting topic because it's something that didn't exist. It's recent. It has 15 years, and it's been growing quite rapidly, especially in Switzerland, where it's the biggest market, but also globally, not only across Europe, in places like France, Germany, Italy, but also Asia. And it's quite interesting. It's been a bit of a topic, not only AMCs, but SMA, separate managed accounts, and so on, in a way to provide quick, fast to market products. And I think maybe you can tell the audience more about what an AMC is and why they should care.
Yeah, absolutely. Thank you very much, Tiago and Drew, for having me. Much appreciated. And Tiago, I just wanted to say I discussed it just before this call with Drew, actually. Some of the cool content you bring out on social media is very interesting and very insightful. So always enjoy that, especially the long form content. So super cool. And so I'm excited to be here with you today.
You're blushing, Tiago. You're blushing.
We care about the content. We love, as I said, I love the content, and I think I'm converting Andrew into a structured products geek. So
I remember at the last conference we spoke about some obscure backtesting methodology and all that stuff. So very good, very interesting. But yeah, let me tell you about AMCs. I mean, AMCs are basically a fully funded debt instrument. Mm-hmm. And the performance of that instrument is linked to some kind of a actively managed portfolio. And so essentially you're buying a note whose underlying is managed by someone else. Mm-hmm. And so that basically means you're actually buying their investment expertise, right? You're paying them a fee and you get their expertise in the form of a tradable portfolio. And so that sounds a lot like a fund. But the difference is that AMCs are notes that are issued by an issuer or an SPV provider. So they can be on or off balance sheet. And they're also much faster to set up than a fund. So for example, you can set up an AMC intraday. Yeah. And you can list it on an exchange the very next day. They're also a lot cheaper to set up and maintain than funds. So that's kind of the comparison to traditional funds.
So that's relevant, right? Because it means that you kind of are between, let's say, a fund, pure mutual fund, whatever, and let's say the traditional structured notes, structured securities. So what do you say will be the quality that they bring from a structured product and the quality that they bring from a fund?
Yeah, I think that's actually kind of their history, right? Like we used to be on the trading desk and then people said, it's such a hassle to set up a fund. And so I would like a more lightweight instrument. And obviously for structured products desk, it's kind of a bread and butter business to bring out these notes on a daily basis. Mm-hmm. And so at one point, someone had this idea, why not use, kind of the note as an empty hull and then wrapper, and then allow someone else to actually trade into it. And that's quite different, as you alluded to, from sort of the traditional structured products instrument. And the two areas where I would say they differ most is one area is that traditional structured products instruments are heavy on valuation and risk management. These kinds of things are difficult, managing volatility surfaces, correlation structures, but the underlyings are static. So they don't change throughout the life cycle of the product. And so in contrast, AMCs are much simpler actually in terms of risk management and valuation. They're basically, they're Delta One products. Their dynamic nature of the underlyings poses some life cycle management and operational challenges for the issuers. And so that's where we tapped in and addressed those.
I find it very interesting, right? Because I think the advantage for me, right, and there's a lot about this conversation about buffered ETFs and funds trying to replicate structured products with listed options. And my honest opinion is, there is a market for it. but they will never be able to replace structured products. And the reason for that is, of course, is the funding, right? Which, a fund doesn't have, right? And of course, it's a security. You have more risk because you're taking the credit risk. It also gives you that extra yield. And the AMCs have that, right? But I guess, but he has the other thing, right? As he said, is the underlying exposure, which is very, very different from the traditional securitized products. How do you see the different AMCs? What are people at the moment getting exposure through the AMCs?
Yeah, it's a good question, and it varies a lot across clients. I think one sort of general trend we see is that just there's been a lot of growth in this area over the past few years. And the growth has been both geographically with new markets opening up, but also within existing clients. So for several of our clients, actually 2025 is shaping up to be a very stellar year in these products. Now, in terms of the applications that you mentioned, right, there are so many. I mean, from thematic baskets to tactical trading ideas to asset managers that want to be able to manage a single product and then put that product into with multiple clients, maybe in different denominations or different currencies or things like that. And that's a prime use case for these kinds of products.
Okay.
You were talking about thematic baskets there. Are you seeing, obviously as the popularity of kind of the AMCs pick up, are you seeing more depth of or horizontal depth of the thematic baskets as well? Or is it still very much that vanilla down the middle of the road?
No, definitely. I see a lot of specialization. I see also, people putting on themes that are maybe not the kind of global long-lasting trends, but also short-term things like, now with tariffs, for example, people putting on trades for that, or, geopolitical challenges where they put on specific thematic baskets. And so overall, what you're seeing with that is that you no longer have that kind of core satellite approach in portfolio management that we're all used to, but you now have all of these different possibilities, and you don't just have it here. You also see it in total return swaps. You see it in now a big thing coming up is actively managed ETFs. Like you mentioned, managed accounts, and so there are all these areas where people basically do the same thing. They have an active portfolio and they try to wrap it. In most cases, securitize it. Not in the case of SMAs, but it's very similar challenges, and it's challenges that are not addressed by traditional systems. And that's why we started the company.
Before we talk about technology, we need to talk about the user cases. So if you have to select like 3 big user cases for advisors, why use an AMC instead of a fund or securitize or a note or a structured notes? What are the big free user cases?
Well, I think that the big one, right, is that you can manage one portfolio, and then you can put units of that portfolio into your client's account, right? So, and your clients may have different risk preferences, they may have different asset bases and so on. And so with AMCs, you can manage a few strategies or themes, and then you can really, with just a few of those, you can massively customize the experience of your clients very elegantly and efficiently. And oftentimes you can also modify, like you can manage one index and then, for example, bring out multiple tranches in different currencies, or some FX hedged or not FX hedged, or, all different unit sizes. And then you can really use these as tools at your disposal to optimally address your clients' needs. So I think that's really at the core of it.
Okay. So, and of course we need to talk about technology because, right, maybe Andrew is slightly younger than me and you, right? But, we started this business, where everything was manual. We put on one Word document, we create a term sheet, OTC term sheet, and, had to manage the life cycle of the products with Excel files and VBAs. It's a completely different world nowadays. So an AMCs is not easy, right? So what are the main points and how does that technology helps?
Yeah, I think it's exactly that. And you make it sound like a distant past, but actually, when we started the company in 2017, most banks were still managing AMCs in Excel sheets. And so I think, because the differences between AMCs and traditional structured products I mentioned a little bit earlier, it's nearly impossible to use existing platforms, that are designed for traditional structured products and use them for AMCs. It's just a very different beast with a very different focus. And so even those companies that are very automated in things like discount certificates, auto callables, barrier reverse convertibles, they are not able to onboard AMCs onto their platforms because an AMC platform has to be designed from the ground up for this dynamic use case, right? And so maybe to give you a little bit of a history, in the last bank I worked for, I was responsible for a $7 billion AMC portfolio, and we managed it entirely in Excel,
Excel.
right? And
Was it Excel 95? It's still my favorite.
I couldn't tell you which version, but it's just, this is not scalable, right? It's not scalable in the number of headcounts. It's not scalable in the frequency of rebalancings. In like when you start, instead of just a core and satellite portfolio, when you start having all of these themes, then the individual theme baskets are obviously smaller than the core basket. And so you end up rebalancing more products that are smaller, and that's also not scalable.
Yeah.
So, and the other aspect to it is that it's just a huge operational risk, right? I usually say it this way: if you like the annual fee our clients pay us, to use our platform is less than what we paid in the past for a single serious operational error that can be avoided by automating and standardizing these processes. So, it's the case is very clear.
So
I think with
go on, Andrew.
sorry, Tiago.
No, go
I
on,
was going
Andrew.
to say, I think we're seeing a lot of companies are coming out in order to try and mitigate operational risk. And I think obviously Vestr is doing it in the AMC world, but as improvements in technology go forward, we're going to see a lot more companies limit operational risk across issuers, across banks. It's the main
Agreed.
thing people are worried about. If you can put it down to an algorithm or down to a piece of code, it's much more less human error. It's much more an automated process and way of doing it. I think we'll see a lot.
It's one of these things. When we started the company, the big selling point was scalability, right? You can do twice as much business with the same number of people. And with all of the things that have been happening in the world, people are now focusing on slightly different things, like managing operational risks, maybe managing the same portfolio with fewer people, so it's a different focus, but the case for the technology still makes sense.
So let's talk about time to market, because you brought a very good point, right? I think structured products have been very, very successful because of all the automation, right? Nowadays, doing structured product, getting a price from a bank, just a few seconds, be able to issue us. Some banks still use Excel, but some are already automated, right? Straightforward process. How does it work with AMCs? How quick is time to market with AMCs?
Yeah, it kind of depends. So we're very tightly integrated with the issuers of these products, right? Mm-hmm. Because that simply provides the best service to the asset managers who are the customers of our customers. And so that integration takes some time. I mean, basically, the deeper you integrate, the more time it takes. I mean, we have a lot of flexibility in how and when you do this integration. But then once that is done, the onboarding of an additional asset manager is very quick. Is really very, very, very fast. And if the client is already onboarded with the issuer, then it's pretty much instant to onboard such an asset manager. And by now we have, thousands of these asset managers using our platform.
So let's talk about also two topics, right? It's fees and regulation, and like fees. Of course, this is not traditional structured product or similar, and it's the funds. Usually structured products have slightly lower fees than mutual funds or hedge funds, right? Because they're secured. Where do AMC fees fit here? And actually, how do you make sure that there is no abuses? I'll give you a very quick example. My parents retired. They were proposed to have invested all the savings that they had for 50 years or more into funds of funds, which were basically just charging fees on top of fees. How can you make sure that there is like transparency on the fees?
Yeah, I think it's a very good question. I mean, we, at Vestr, we stand for full transparency, and that's also how we built the platform. I don't mean just about fee transparency, but also about, reporting, regular reporting, up to date composition, full composition, not just the top holdings, liquidity, all of these things. In our case, I mean, our direct client base is kind of dominated when you look at the assets managed by banks or very large institutions. And so there, I think this is less of an issue, right? And I think you've alluded to smaller, basically securitization vehicle providers.
Yeah.
And so there, I mean, we're quite careful who we work with. That's like, the first line of defense. And then, well, basically we just try to have a positive impact on the industry in general and try to lead by example. So when there's a question if we should disclose a fee or not, if it should be shown on the platform or not, we opt for displaying it, right? But obviously, in any industry, there are some black sheep who will want to exploit their customers.
Yeah.
I mean, we don't stand behind it, but at the end of the day, we're a technology provider. So we do our best to, by default, make it as transparent as possible.
Yeah, and I think ultimately, this is a solution, right? It's whoever used the tool, all right? That's exactly where it is. And of course, that brings the question, right? These products very successful in Switzerland, right? They're starting to expand. How do you see that expansion into other markets like the French market, the Italian, German, and even across the world, right? Especially in Asia.
Yeah, exactly. So all the markets you mentioned, there's really active stuff happening, right? People are, like, for example, in France, there's a new regulation since just a few months ago, right? In Italy, things are picking up. So I think, but these markets, they already have a number of products in that space. But what I'm seeing is beyond this. I'm seeing like, areas like South Africa, for example, or Latin America. Latin America has picked up considerably. So it's really going global. And even if in many jurisdictions, like in the US, you wouldn't call it an AMC, but you would call it maybe an exchange traded note or something like that, like there are many index linked note or whatever, right? I think there's at least a dozen names for something that looks an awful lot like an AMC. At Vestr, we're agnostic to this. You call it whatever you want. If you have a portfolio that gets actively managed and you do a note on top, then we're there for you. And even if you don't actively manage it, if you do like a static tracker, for example, to me, that's basically an AMC that doesn't get rebalanced. So the market for this is enormous, right? It's trillions.
If we go back to our audience in terms of advisors, who are looking at this, right? This is something new that they don't understand, especially the ones who invest in structured notes and more the mutual funds. What do you say is the target market for the AMCs?
I didn't quite understand that question. So
who do you think should buy AMCs? Well, what type of clients or who would benefit from investing in AMCs?
I think it's actually very widely applicable. I mean, you call it an AMC, but this type of structure where you have dynamic underlyings and you do something on top of that, you have someone managing the product. So I'm also including total return swaps. And then suddenly it's a very institutional product, right? If you just call it an AMC in the Swiss retail market, then it's a very different client. But yeah, you can use similar structures. For example, you can use to invest, for example, in crypto markets, right?
Yes.
So it's so widely applicable that I don't want to pin it down to just one group that is sort of the most natural user. But yeah, I mean, externally, asset managers have been in this business for a number of years, and it's been very successful in private banks. It's everywhere basically.
Do you see a lot of crypto linked strategy in your AMC offerings? Is that something that's big right now?
We have a lot of even crazy stuff in our AMCs. So our AMCs range from like very small, like $500,000 kind of AMCs, to like one AMC with 2 billion in it, right? Like so it's a very big range, and we have people doing, you know, complex option strategies. We have people doing crypto. We're actually connected to multiple crypto brokers as well, so they can even just execute right through the platform to rebalance their crypto assets. We have people doing student loans, you know, so you can have bankable assets, non-bankable assets. You can do this on balance sheet or off balance sheet, and you can really find your personal sweet spot, like what matches.
I'm very curious now, what for you is the most, let's say, innovative or different AMC that you've seen differently, that you thought to yourself, actually, I wouldn't mind investing in this?
That's kind of two questions. I mean, sort of the most exotic one is racing horses.
Okay.
So people basically, you know, buying racing horses and then securitizing them. But that's not necessarily the one that I, you know, would be the first investor of.
Yeah.
But things like student loans is actually a very interesting thing, because it's sort of it's a private market. You have the information is very closely managed and guarded, and you can have some very good yields, right? So it's quite cool.
No, what happens? Okay, so I guess you have that as the what happens if they what type of yields? I'm very curious to see. I'm not sure if you can reveal.
Yeah, they're good yields.
They're good yields. Okay.
Well, I mean, you have to keep in mind that in Switzerland, you know, market rates are practically zero, going negative, I would predict, and I think many would, probably including yourself.
Yeah.
And so when we're getting close to 10% yield in Switzerland, that's a lot, right? But when you go to other countries, then obviously it doesn't sound so good anymore.
No.
But in Swiss francs, it's quite
it's good.
Quite good.
Yeah, I think the average yield on an income structured product in the US is around 9% yield. So if you think about the future, what do you think is the future for the AMCs?
Well, there are a lot of dimensions. I would say more products, increasing volume, smaller ticket sizes, more frequent rebalancings, more innovative underlyings, more geographical expansion, basically more of everything.
And in terms of trends of exposure, right? Because that's what the client wants, right? And I think the AMCs, as you said, is quite interesting vehicle because it's fast, it's cheap because of the compared with the fund. So what are the trends in terms of exposures that you think AMCs will be a good way to provide exposure to clients?
Well, I mean, this is a sort of very generic question, but I think, I mean, one area where we look at very carefully, and that's not just exposure in terms of investment exposure, but also exposure of what we are betting on as a company is AI.
Mm-hmm.
And we really started using it kind of at all levels of the organization, and they're mostly for things like, you know, automating tasks, to build new functionality.
Yeah.
Our developers are all very up to date with these tools. And so we're very deliberate of how we use these tools, mostly internally currently, but we're also working on some projects. I know you at WSD get a lot of AI street cred, but we're doing a lot too there. I think a bit less flashy. Like we don't build the AI avatars you guys do. But, you know, we care less about the buzz and more about sort of the tangible results. And so, I would say the progress has been amazing. We focus a lot on, you know, what data we can feed into these systems and what the actual tangible results are.
But I mean,
of course, to your question, I mean, this also plays into people using AI for investment recommendations. This also plays into, you know, portfolio construction. It plays into creating reports potentially. There's a lot of stuff where this is valuable. Reading term sheets.
Yeah, no, definitely. Well, look, as you said, right, we use AI everywhere. I personally use it a lot to be much more efficient, right? But ultimately what it matters is the data, right?
Exactly.
And I think this is quite interesting, right? Because you have all the data on the AMCs, you can see a lot, and you can help your clients not only becoming more efficient, but also finding new opportunities.
That's a very good point. And I think there are sort of multiple companies in this space at the intersection between technology and structured products. You are certainly one of them. We are one of them. And I think all of us are well served to look into this and provide value to the clients with AI and to make sure that the data is as clean as possible.
Great. Look, thank you, Rico, for this conversation. I think this is quite helpful for everyone, right? Because I get a lot of questions from advisors, and then AMCs is something that is popping up more and more. And I guess the only thing I have to say, if you think about topics that you'd like us to do next, which one within the structured products industry you think will be relevant for you and for our listeners?
Very interesting question.
You can say beard care if you want.
No, there are many things. I think active indexing is interesting. I don't know. I mean, there are, we already discussed the AI. I think there are different angles that could be covered. Yeah, I mean, there's a lot.
Okay, great. Look, again, thank you. I think it was a very, very interesting topic. I did learn some things, and I think Andrew too. And we appreciate you coming here and give your knowledge.
Yeah, thank you very much, guys, for having me, Tiago and Drew. Much appreciated, and see you at the next conference.
Yeah,
Take care.
For coming. Cheers.
Take care.